Welcome to Drill Down Earnings. We have the latest quarterly look at Qualcomm with the results just out. I'm Chief Market Strategist for Epistrophy Capital Research, Cory Johnson, where we focus on the 50 most important companies in technology. So Q1 earnings from this company, it was better than Wall Street expected, with $11.7 billion in revenues and $2.83 per share in earnings. That's kind of right in line with Wall Street estimates, but the revenue's so much better. So why is this stock down? Let's look at the actual numbers here, because a lot of them were good. 17% revenue growth, 23% operating profit growth, 15% net income growth. So double digits across the board. Recovering sales on the top line of 17% certainly is the big story here, and margins getting better. Margins now at 30% on an operating business. Really great for this company. Now, as much as they want to talk about the automotive business, which is doing nicely, and we will, and Internet of Things, which is doing just fine, the handset business is almost 2/3 of this company. It is still a smartphone business. And the question is a recovery really happening in smartphones, or the sales just kind of humping around here to 13% year-over-year growth as replacements? Now, while the company is a little more diversified than it used to be, in particular with the Internet of Things business in the last 2 years, it's still a handset story. Automotive, dramatic growth, double-digit growth, 60% growth to nearly $961 million. I'm going to call that almost $1 billion in automotive. And think about what else is happening in automotive. Not a lot. These guys are putting the smart content into smart cars, but smartphones is the business and smartphones is the problem. What their guidance about what's going to happen in smartphones in the next year of being basically flat was just not what the market wanted to hear. The stock was down 5% in after-hours trading after being up 22% for the year. That's exactly in line with the S&P 500. So now, assuming the results hold in after-hours trading, the stock's actually underperforming the S&P 500, which is kind of remarkable because it's done such a great job turning this thing around here. But there are a lot of questions going into the call. Was the growth in sales this quarter from tariffs, from the fear of tariffs once President Trump getting into office and customers ordering early into China because they might not get things later, or certainly they'd be more expensive? Well, that didn't seem to be the case. The company said that there was no build out ahead of tariffs. But the other question here, what's with the flat or low single digit expectation for their chip growth into smartphones? Because they really have had some nice customer wins. And they're expecting no revenue from Huawei because they think they might lose that. They're negotiating that contract. They're expecting their Apple business, which is really big, to go away. But they've had some great success, in particular with their Snapdragon Elite. But nonetheless, the company talking about how the demand of their greatest chips is good, but not really going to move the needle on the top line. Here is CEO Cristiano Amon.
Snapdragon 8 Elite has been quite successful. Demand on smartphones onto X Elite exceeded our expectations. The trend of premium tier continued to expand. Smartphone is number one consumer electronic device purchase. I think there is a positive launch of AI features. Customers build great devices. They are gaining share in the premium tier, and that is what we're driving demand.
So gaining share in the premium business, but maybe not growing revenues in a big way. What's it all mean? What's your big drill on earnings takeaway? What's the one number that tells us a whole lot? Well, I'll tell you. Qualcomm Q1 earnings, the essential summary. You got to remember there's double-digit growth across the board here. So revenues up 17%, operating profits up 23%, net income up 15%, and yet the guidance for this company was not super strong because the handset business is not super strong. And there's your drill down earnings bite, the one number that tells us a whole lot. The handset business was up only 13%. Even the overall growth in this company is up 17%. They're selling more expensive stuff, but not as many as they would like to. And that maybe is the worry here for Qualcomm. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Check us out on X at Cory TV and on all the socials, Instagram and TikTok, and certainly on YouTube at Drill Down Pod.